Hello everyone, my name is Dishant Chaudhary and my student ID is NRI2008. Today I am going to give presentation about our group assignment. I will start with the introduction. So this report has been prepared to discuss some crucial part of finance applicable in business. Different factors regarding the Australian finance institution have been discussed in part 1. The facts about listing in Australian capital markets are discussed in part 2. And in the last part, the implementation of NPV has been discussed. So we start with the introduction. Now we will compare the 4 key financial institutions. First, we will talk about the Auswide Bank. It is also, Auswide Bank is categorized as authorized deposit taking institution. The market capitalization is 185.02 million Australian dollars and total outstanding share is 42.43 million Australian dollars. The chairman of this company is John Humphrey and Bill Scaffer is the CFO. Now we will talk about the QB Insurance Group Limited. QB Insurance Group is categorized as Insurance and Fund Managers Group. The marketing capitalization of QB Insurance is 111.3 billion Australian dollars and the total outstanding share is 1.47 billion Australian dollars. Now we will talk about the third company that is Blue Sky Alternative Access Fund Limited. The capitalization of this company is 1.38 million Australian dollars and total outstanding share is 194.74 million Australian dollars. John Kane is the chairman and Justin Henwood is the CFO of this Blue Sky Alternative Access Fund Limited company. Now the last but not the least is Bell Financial Group Limited. Bell Financial Group Limited is a non-bank finance intermediaries group. The market capitalization of this group is 344.8 million Australian dollars and total outstanding share is 320.74 million Australian dollars. Now we will have an analysis of the 3 financial management questions. We will take one of these 4 companies. So we will talk about the QB Insurance Group and how they manage their financial things. So now the QB Insurance Group issued international bond for USD 500 million. They issued an international bond for 500 million US dollar on May 2020 and they issued that at a whopping 6.75% of interest rate. Now talking about the problem, there may be a country risk that can be a potential threat in this. Now we will look at another question. So that is capital structuring. So now QB has raised $825 million for new equity capital in wake of coronavirus pandemic. Now they will raise this $750 million through institutional placement and further 75 million will be raised through share purchase plan. Talking about risk in this, there can be equity risk which may put pressure in the future. Now last but not the least, let's talk about the working capital management. QB has cut out the financial payout due to the unusual weather. They have censored its dividend payout to cope with potential crisis. And they will make more cash available at hand of the company that will have to manage the increased operational cost. There is a problem in this also that market risk may affect the planned outcome. Thank you, and now one of my friends will discuss about the next factor in the next video. Thank you.
My name is Sejal Chaudhary and my student ID is VFO2078. Here I would like to talk about research and fact finding of Australian financial market. The comparison of 4 key financial institutions: the Auswide Bank Limited, QB Insurance Group Limited, Blue Sky Alternative Access Fund Limited, and Bell Financial Group Limited. The first one is Auswide Bank Limited. Auswide Bank Limited is a commercial bank. The company is operating in the banking market sector for financial industry in Australia. The code of stock of listed Auswide Bank Limited in Australia Stock Exchange is ABA. John Humphrey is the chairman and Bill Scaffer is the CFO and company secretary of ABA. The second one is a QBE Insurance Group Limited. The QBE Insurance Group Limited is an insurance company. The company is operating in insurance market sector of the financial industry in Australia. The code of the stock of listed QBE Insurance Group Limited is AX is QBE. Michael Wilkins is the chairman and Inder Singh is the CFO of QBE. The third one is Blue Sky Alternative Access Fund Limited. The Blue Sky Alternative Access Fund Limited is an investment fund. The company is operating in the diversified financial sector of the financial industry in Australia. The code of stock listed Blue Sky Alternative Access Fund Limited is AXS is BAF. John Kane is the chairman and non-executive director and Justin Henwood is the CFO of BAF. The last one is Bill Financial Group Limited. The Bill Financial Group Limited is an investment banking company. The key activities of the company are to underwrite new stock and issue and to provide financial advisory services. The code of stock of listed Bill Financial Group Limited is AXS is BFG. Alastair Brown is the chairman and the managing director, and Dean Andrew, director, is the CFO of BFG. Thank you.
Good afternoon, everyone. My name is Kazi Ghulam Rabbi, bearing ID MEE2104. So let's get started with my presentation. Fact finding of the listing on ASX. ASX means Australian Security Exchange. So there are some advantages. So now I'm going to discuss about the advantages thoroughly. First of all, access to capital for growth, provide currency for external growth, creates business image, creates greater efficiency. So there are some also disadvantages for listing on ASX. Number one, it's a volatile share market, costly reporting requirements, additional fees and costs for listing and share issuance. There are some requirements for listing on the ASX. Minimum 300 non-affiliated investors, 20% free float, minimum Australian dollar 1 million aggregated profit over 3 years, minimum Australian dollar 4 million intangible assets or Australian dollar 15 million market capitalization. There is a one image for ASX equity listing free calculator. Choose the free calculation, then next click number of securities, value per security. So total value is 5,000 multiplied by 4, $20,000. Initial fees payable is $38,000 and $422. Next slide is, there are some steps for listing on the ASX. Number one step is appointment advisors. Number two is preparatory work. Number three is initiate institutional marketing. Number four, submit prospectus with ASIC. Number five is processing of listing application by ASX. Number six is marketing and offer period. Number seven, closing the offer. Next slide is fact finding of requirements on financial advisory service registration. Financial advisors register includes all authorized financial advisors. The register doesn't include individuals who provide general or personal advice on products other than financial products. The information on the register includes name, experience, qualification and training, etc. about authorized financial advisors. Professional standards of authorized financial advisors are approved academic qualifications, passing the FASEA exam, participation in 40-hour CPT exam per year, fulfillment of required code of ethics. That's all from me and thanks.
Hello guys, my name is Rahul and my student ID is ZME32, and in my part here I'm going to discuss about risk and project evaluation and the basis and BV. So in this question we have given some variables, some sales and variable cost, gross profit, and we need to calculate the gross profit, operating cost, and the net profit, and we need to calculate the depreciation. So here I can explain you some amounts. So operating profit is 30 lakh and 50,000, and we calculate the depreciation. So remaining value is 18 lakhs, and depreciation per year is 4 lakh 50,000. When we calculate the cash inflow for year 1 to 3, the net profit is 21 lakh and 35,000. So we add the depreciation, so the cash inflow is 25 lakhs and 85,000, and the total cash flow for the year 4 is 33 lakhs and 85,000. So the initial amount was purchase price 20 lakhs plus the working capital is 6 lakhs. So now the NPV of the base case is as follows. So, and the discount rate is 10%, and the base NPV for the case is 61 lakh 40,513 Australian dollars. And then the sensitivity analysis will be conducted, and in scenario 1, unit sales decrease by 10%, and it goes on, and at the end the net profit is 15 lakh 96,000, and the working capital at the end is 6 lakh. So now the NPV, the change in NPV due to the change in sales unit as follows. Is new NPV is 44 lakh 31,955, and base NPV is 66 lakh 14,512. The change in NPV is minus 27.8%. Okay, thank you.